Good afternoon, everybody. The day is still looking quite miserable. Of course, it is a slight improvement on what we were looking at this morning, but so far, still not looking great. You've seen that decrease today where we are falling, again climbing up to where we are now, but not really anything worth noting, especially after the decrease that we have seen earlier this morning. And on the front of things, yes, it does seem very miserable, it does seem very disappointing, but that is only half of the story, as I've said before. It's really about looking behind the scenes, which is not very hard to do anymore, and obviously uncovering what really is going on. And that's what brings me to the article that we're going to be looking at and that I'm going to be sharing with you guys and reading over. If you enjoy it, make sure to smash that like button, but as always, remember, this is my opinion and it is not financial advice. So, the article and the title of it reads pretty simply. It's coming from risingcandle.com and it says this: hedge funds shorted more than 200 billion worth of securities year to date. Margin calls on the horizon. It's a 3-minute read, and if you want to have an in-depth read of it, please do. But speak about how they have been short selling stocks for a long time, and some of them have been covering their short positions due to the risk, and they want to reduce it in the current market conditions. So there are a lot of reasons why the market is acting the way it is at the moment, from things like the new variant of COVID that came out, up to interest rates, and of course the whole Ukraine situation, and commodity prices, which are subsequently going through the roof. You know, there are a lot of reasons to ask the question as to what's going on. And, you know, there are a lot of indicators as well showing us that things are looking, pretty much awfully for the hedge funds, to word it quite simply. And that's what brings me quickly back to AMC. Now, this is not going to be an in-depth video. If you want to read it in your own time, please do. I would recommend it. But it goes a bit deeper than what we can see here on the share price. It speaks to us about how they have been selling their positions short for a very long time. They've been adding to their shorts over and over and over again. And at some point, yes, they are going to have to cover. Now, the key point in this was going to be the number of the 200 billion year to date. It's not an insignificant figure. So just think about it. Think about how much money that is. Think about the effect it would have when they have to cover. And that is why we are not seeing the price of stocks like AMC and potentially even others run up. That is a simple reason. They have a lot of money which they don't want to lose. I don't blame them for that. Of course, they're going to do everything that they can to protect their business. At this stage, I think they're in it so bad. Again, that's only my opinion, but I think they're in it so bad. They're kind of in trouble if they do, and they're in trouble if they don't. So for them, it's better if they don't let it run, because that way they can at least give the illusion that nothing bad is happening and hopefully get away with it. Now, of course, we know that's not going to happen because people aren't selling, but I do think it is a tactic that they may try. And they have been trying it for a long time. But what I'm trying to say here is there's a lot of money in shorting. There are a lot of money in stocks which were risky to short. We've seen that already in the last year with GameStop and arguably AMC on the big run-up that we had. But really, we know there's a lot more money left in shorting AMC, GME and other stocks. And at some point, hedge funds may get into trouble. Again, the markets are very hard for anybody to predict, from a retail investor to a professional. And it's hard to say what's going to catch both retail investors but also hedge funds out. We don't know what's going to run and we don't know what's going to sink. But of course, it is definitely possible at some point that they are going to, well, it is almost inevitable that at some point they are going to make a mistake, because it is impossible to predict the market with 100% accuracy. Now, I don't know when that mistake is going to be, but I'm definitely happy to wait for it. That's just the way that I see it. I want to hear what you have to say on it down below, so do drop me a comment. But for now, I'm going to say goodbye. Thank you for joining me, and I will see you later on. Thank you for watching through till the end, but let me tell you about our Discord. So on your screen you will be seeing the N2S Finance Discord. Obviously it is split into multiple sections. Basically at the top we have updates from me and all that kind of good stuff. If you scroll down a bit further, we have the main sections where we focus on cryptos, SPACs and other hot stocks, including penny stocks, even stable growth stocks as well, and we even have a special AMC GME chat. If you scroll down you can see some research and DD from the community. We also have funny memes and you can see actual contributions from members down here. And again, if you do join us, it is completely free, link is down below. But if you do want to become a Patreon, you will actually get a pink sticker which will be displayed on your name. So your name will come up in pink as mine comes up in red down here, and that will show that you are a Patreon. But other than that, guys, you can join completely for free down below. You do not have to pay anything if you do not want to. Thank you for watching, see you soon.